And we are live with our first monthly market update for the Tailored Property Wealth podcast. We are going to be recapping some figures for the month of June, just across a couple of different metrics that we kind of keep track of, and it's going to be able to give you a good update of what's happening out there at the moment in the property market. So we'll get straight into it. I'm going to dive into some of those numbers. A lot of this data is going to be from CoreLogic, and there will be some data from SQM Research also. Okay, so Brisbane 1.2% for the month, Adelaide 1.7% for the month, and Perth 2% for the month. So some really big numbers there across Brisbane, Adelaide, and Perth again. If we're looking at that on an annual basis, Brisbane's done 15.8%, Adelaide's done 15.4%, and Perth has done 23.6%. So if you're sitting around and you're waiting for rates to drop to get into the market, you're playing catch up because of that growth that's happening at the moment, and that's just continuing on. Even though rates haven't gone down and they're just holding at the moment, people are struggling with money or whatever, prices are still moving up. So Sydney, it did 0.5% for the month. Melbourne went backwards 0.2%, and then pretty much all other marketplaces kind of just sat flat. So nationally, there was a rise of 0.7%. Now, if we get into stock levels, you'll be able to see a correlation between the low stock levels and then that price growth that's moving up. So Perth, 23% lower than what it was 12 months ago with stock and listing levels, and 47% below the 5-year average. So chronically undersupplied from that supply point of view, and that pushes the pressure on prices and why we can see Perth performing well at the moment. Adelaide, 43% below the 5-year average. Brisbane, 34% below the 5-year average. So chronically under what the 5-year average is. We're seeing it in the business at the moment. It does take that little bit longer to find properties, and that's just simply stock levels are low, which means finding those high quality properties, doing that due diligence just does take a little bit longer. But it's always worth it not to sacrifice on that quality. So if you're going out and purchasing a property, don't sacrifice on quality just because you might finding it a little bit hard to find the property at the moment because stock levels are low. Melbourne, 14% below, 14% above the 5-year average, and Hobart massively 46% above the 5-year average. Hobart pretty much sat flat. It rose 0.1%, and Melbourne, so it went down that 0.2%. So that's why you aren't seeing that growth as such in those marketplaces. And that's just because there is that additional stock at the moment. So some pretty cool data to look at that CoreLogic are putting in their monthly update at the moment. And it's the rise from the onset of COVID to June 2024. So Sydney has only grown 28.2%, Melbourne 11.2%, Brisbane with a massive 61.5%, Adelaide 63.9%, Perth 66.6%, Hobart rose 28%, Darwin 25%, and Canberra 32%. So at an absolute worst, you still made money and property prices haven't gone backwards, but some are definitely underperformed during that period of time versus some of the other marketplaces that have performed extremely well. So moving straight into rental income growth. This is just across the metro locations that we keep an eye on. That's the markets that we focus on, obviously. Perth rose 13.1%, Melbourne 9.2%, Sydney 8.4%, Adelaide 8.3%, Brisbane 7.8%. Some of the marketplaces that have grown the lowest, Darwin 3.7%, Canberra 2.4%, and Hobart 2.2%. So the rental growth is slowing down a little bit. However, it's still moving up. So as an investor, you are getting that rental income growth over time. Now, rental yields across the capitals. So Canberra, 3.9% gross yield. Darwin, 6.5%, really high in Darwin. We personally don't target Darwin, so don't chase the yield, I guess. Hobart, 4.3%. Perth, 4.4%. Adelaide, 3.8%. Brisbane, 3.8%. Melbourne, 3.6%. And Sydney at 3.1%. So obviously, depending upon the metro location as to kind of that gross yield you can be targeting, and then depending upon that local government area as well as to what the yield will look like in that particular market that you are targeting. Alrighty, and then lastly, we've just got some details on vacancy rates as per SQM Research. Okay, so nationally, vacancy rate at the moment is 1.2%. So still massively undersupplied from that investment property point of view. It's still hard to go out there and find an investment property because there's just limited stock. Brisbane, across the board, vacancy rate of 1%. Adelaide, 0.6%, along with Perth, it's 0.6% as well. So those marketplaces are chronically undersupplied from that property investment point of view. And Sydney is at 1.4%, and looking at the data, it's risen since March 2024. Now, this data that we're speaking of is for March 2024. For May 2024, I should say. So the data is a little bit lagged. It's not right up to June like the CoreLogic figures that we're looking at. But still looking at what that most recent data is super crucial. Melbourne, 1.3%, and again, same as Sydney, has risen from March, only ever so slightly, but it's good to kind of identify those trends. So look, that's a little bit of the market update across the board for June. If you're sitting on the fence and you're waiting for rates to go down, you can see from this data what property prices are doing at the moment, what they've done for the last 12 months. So if you're sitting on the fence and you're waiting, it's ultimately just going to cost you more. If we see rates go down, whenever that does happen, it's going to be a minimal amount of interest or repayments that you're going to be saving versus if you wait in 12 months' time. If we look at some of these marketplaces that have done over 10%, it's a massive amount of money that you need to borrow to purchase that same asset again. All right, that's the first monthly update for the Tailored Property Wealth podcast. If you have any suggestions on data you want to see included in this monthly update, please let us know. We can include it moving forward. But every time this comes out moving forward, we'll be doing a little monthly update so you guys know what's happening in the marketplace at the moment, price-wise, stock levels, all that sort of thing. So thanks for listening. Have a great day and see you on the next episode.